Hey guys, welcome to today's video. So on this video, I'm going to help you understand the market side and economics side of the ongoing India-US tariff war, right? Now, I'll explain the entire story in 8-10 points. If you watch the video till the very end, you will have a grasp as to which industries you can pick in India right now, which might be okay, and which industries in India might get hit really badly. For example, I'm making this video on Wednesday, right? And today, Nifty Pharma, which is one of the biggest exporters of India to the US, it fell by roughly 2%. So the entire index fell by 2%. This was a healthy fall. So should you go and buy Nifty Pharma? Should you not buy? What will be the impact on IT stocks? So I will talk about all these different industries and help you understand and decode the economy side of things. I'm not a politician, neither do I aspire to be one. I don't care what right-wingers or left-wingers are talking about and all that stuff. It's just BS, right? So I'm not a foreign policy expert. So I'll not talk about those things. You guys understand those things better than I do. So I'll just keep the commentary specified on the markets. So okay, so let's begin. And the first key point is that trade war is not good for either of the economies. That's fairly commonsensical. It's mutually assured destruction in a way, but the extent of destruction needs to be understood. What you need to understand is that, see, US is a much bigger economy. The impact on them, if India decides to put any kind of ban, for example, okay, oh, you know what, we are not going to export medicines to the US. Well, it doesn't really matter to them that much. They can diversify their value chain much faster. Now, some of you would get angry at me for saying this, so I'll give you data also. Now, what US has started to do recently is that they have started to move a lot of that supply chain to a country called as Puerto Rico, right, which is close proximity to the US. So they are already building that base. It's not as if that they are late to it. There is AI revolution going on right now. You must have heard of something called as gigafactories. This is what gigafactory looks like. And in the next 5 years, a lot of manufacturing will come into these factories. And there is no reason to believe that, US might not be able to manufacture it themselves. Point 2. This trade war is going to have two types of effect. One is called as first order effect and the second is called as second order effect. First order effect is something that you can estimate what is going to happen in the short term. Now our RBI governor has said this, that hey, this trade war is not going to create much impact on India, and he's right. I 100% agree with him that I don't think anything major is going to happen in the short term due to this trade war. Now, when RBI issues these type of statements, they are primarily looking at the GDP growth, right? So currently India's GDP growth is 6.5%. We have to be growing in excess of 8.5% from the base we currently are at. And there seems to be no plan towards this. And this current ongoing India-US tariff war is not a good sign. Why? Because it creates something called as second order effect. Now, what is the meaning of second order effect? Now, the meaning of second order effect is that, see, this event played out, India-US tariff war. This was the immediate short-term impact, but in the long term, something happens, right? There is a second order impact of this particular step also. Okay, so here is a statement that was done by a prominent guy, right? I mean, he used to work in Bush administration, so he understands foreign policy a lot, right? So his viewpoint was that, hey, you know what? Trump is redoing or undoing 25 years of good work on India-US relationships. Now, this is true and it is Trump's fault. I 100% get it. But the issue is that it creates more second order impact on India. So let me help you understand, right? So now here, what will happen is that, see, step one is that Trump will introduce some kind of tariff, like whatever 25% tariff on pharma. Okay. Now, what do you think this leads to? Well, it leads to long-term supply chain issues, right? Now, what are long-term supply chain issues? For example, I gave you the example that US is moving a lot of capacity to Puerto Rico, right? So that is a country, right? Now, this will happen over a 5-7 year time frame. Now, as a result, what will happen, right? A lot of investors right now who want to invest in pharma. I'm not talking about stock investors. I'm talking about people who want to build factories in India, who can manufacture APIs, which will eventually get exported to a market like the US. They will stop. They will stop and wait. Okay. Now, as a result, growth will stall. Now, this impacts us more. Why? Because in India right now, the growth options are very, very limited. We have been playing wait and watch. Why? Because you tell me, if I ask you a point blank question, name 5 industries in India which are growing in excess of 15%, 15% in dollar terms. Okay, so you will have a very, very hard time, right? Pharma potentially was one that could have grown at that scale because we were gaining some scale. We had some kind of competitive advantage because many factories in India that manufacture APIs for US based export, they were US approved, right? So getting that approval process in, getting that licensing in, that requires a significant timeline, right? So we had some kind of advantage going. Now, unfortunately, that advantage is taken away. So all these things lead to a second order effect, which is not good because we are killing a lot of our growth industry. So I hope that some resolution is reached fast, but I just wanted to explain you this point because what this does is that it does not allow our GDP to accelerate, right? Now, this is a problem, especially in context of market, which brings me to point number 3, which is the valuation of Indian market. Now, this is the Indian market right now. And if you study the PE ratio, right, PE ratio of the Indian market, right now it is somewhere around 23, 24. Now, this is considered to be high because usually the market is considered to be fairly valued around 22, 21, something around this. And we are at 24. So one could argue that the valuation of our market is a little bit expensive right now. This is over a 2 to 3 year time frame. So if our economy is not accelerating, if there is sentiment loss in the Indian stock market, because for the last 1 year, what has been happening, right? We have gone sideways. In fact, if you had invested in Indian stocks, you would have done really badly, right? So I do run a US stock investing community in case you guys want to learn more about AI-based investing, tech-based investing. So this is something of a new portfolio that I've created, and I give like detailed commentary about that. In case you guys are keen, you can follow along. I've already built like $1 million plus portfolio, right? So I've put in significant amount. I track the markets. So I share a lot of information, but it is not as if that I'm trying to disappoint on the Indian market. I love the Indian market. I would love to invest more money in the Indian market. But for that, what needs to happen is that, see, we need to see some kind of GDP acceleration. We need to see some kind of valuation sensibility return, right? So both these things are important, right? Because if the GDP is growing like this, right, then it is typically seen that for a country like India, the stock market will also follow along, right? And I'm talking about nominal GDP here. Please understand the difference between nominal and real, that nominal GDP includes inflation. This US-India trade war breaking out, it doesn't really help our GDP on a long-term basis. Why? Because second order effect come into equation. A lot of people who wanted to put in growth capital in India, they would refrain. This also needs to be analyzed from the point of view that our net foreign investment in India has been really, really low. Net FDI, that was only $0.5 billion. It's one of the lowest, right, in the recent history, and that's not good because again, the objective of India is to grow out of a low income country into a middle income country. The more help we get, the better it is. So this is where we are in terms of market valuation. Now let's turn our attention to individual sectors. For example, maybe some undervalued sectors are there. So let me speak about it. So if we check, for example, Nifty IT, right? Now Nifty IT, if you check on a weekly candle, so you can see weekly here, we are here, right? And this is almost a 4-year low, right, on Nifty IT. Now, does this mean that we are at a great buying point? So technically speaking, yes. So these are like, moving averages which I have put, and we have touched even 200-day moving average, in fact, fallen below 200-day moving average. So I would say that Nifty IT is a great asset to own at this point, or at least start building good, healthy positions on it. Now, why am I saying it? Well, because now you would say that, you know what, okay, India-US trade war, we export a lot of IT is crude. Technically, yes. But the point is that a lot of IT will now go towards domestic. Okay. So domestic, this is one revamp plan. Okay. Second key point, the valuation has already exhibited something called as time correction and price correction. For example, the price was here. Now you're getting to buy it here. This is all the things like US-India trade war has been factored into it. AI revolution has been factored into it. Technically, it's kind of makes sense because there has been a parabolic drop on IT stocks. So from that angle, the only thing IT needs to do from the stage is that if it can exhibit even a modest growth domestically, right, then it should be okay, right? So this is one. Second key thing, if you think about it, that for example, if India and US go on a SAR path, right, and India is trying to build like new supply chains to export to, let's say, Europe or South America or wherever it is, what do you think is easier to export, pharma products or IT products? I would say IT products. Why? Because for example, let's say that India wants to export more pharma products to Europe. What does it have to do? Well, ask a natural question that why is India able to export so much pharma products to the US? Because our factories are US approved or US FDA approved, right? Now, same certification, or they need to get additional certification to export to European countries. Now, that certification life cycle takes a lot of time, right? You have to build like separate type of physical infrastructure. You have to have a separate quality check process, etc. So when it comes to digital or IT or software products, that supply chain is much easier and faster to build, right? And I'm sure that the IT companies are much better placed to do that, and they might already be doing it. So from a valuation perspective, other things perspective, it kind of is okay, right? So this is my perspective. Now, of course, I can be off, and I'm not saying that sell your house, invest all your money in IT. This is going to be slow growth. But honestly, everything in India right now seems to be extremely slow growth. So let me just type it out here. So here what you will see is that on a long frame, right? For example, this black line that you see, this is 50-day moving average, right? So Nifty Pharma has only dropped till here. There is a good chance that it can actually fall to this red line. Now, ho ye sakta hai ki, for example, this red line goes like this. And by the way, this red line is called as, I've put like 100-day moving average line. This is 100-day moving average line. So therefore, it kind of makes sense to play a little bit of wait and watch. If you want to build new positions on Nifty Pharma, and if you have 100 rupees to invest, maybe just invest like 20, wait, if you can downward average it. If you get an opportunity to buy it here, then buy it. This is way above its 200-day moving average on a weekly basis. If there is a structural correction on pharma stocks, this is going to fall like crazy. Okay, so please remember this. If, for example, US decides to move a lot of its supply chain to Puerto Rico, this is going to be bad, right? So this is 2. Now, what about something like domestic consumption stocks? So for example, Asian Paints, how much has it moved? It has moved like 15% up from its bottom, and it is still valuation wise, it is sensible to buy, right? So this is what I would say, and I will leave the commentary there. Okay. Now, what about high growth stocks? For example, we have something like Bajaj Finance, right? So should we like continue to add more? What should we do? See guys, what happens is that these type of stocks, for example, this was the 2020 fall, this was the 2022 fall, right? Everything had corrected. And since then, Bajaj Finance had gone where, right? So for example, from here to here, right? It has gone up by almost 70-80%. And this was one of the top performer stocks in the Indian large cap. Okay. Now, this was, if you actually take a look, right, this was the start of a bull run, right, or a mini bull run from 2022. And now we are at the late stage of a bull run. Now, this is a NBFC company. Now, during the later stage of a bull run, what ends up happening is that there are usually bad loan problems, right, or the collection becomes less. There are more defaults, there is some kind of bubble pop-up that happens, and then these are exactly the type of stocks that will correct a lot. So I'm not saying that sell it, but definitely this is not the time to add like crazy, right? You have to, or like SIP shuru kar do thing, right? Nothing of that sort. You just have to be sensible that if you get a good valuation, buy it, because overall the markets are high. Some stocks are very much up. Some stocks are okay. Now, what about mid-cap companies? So again, if you take a look, this is not even trading at its 50-day moving average. The valuations are very, very expensive. Okay. Still, for mid-cap companies, you should ideally buy mid-cap at this point. Okay. So whenever this red line moves, you can move it. How to create this setup, how to do other things, I anyways teach on my stock market course. In case you guys are interested, I have a batch opening up. You guys can check it out. Mid-cap 150 is sitting on very dangerous levels. Why? Because what ends up happening is then people decide not to put capacity or not to build a lot of stuff or not to bring a lot of capital, right? What I was telling you in the first half of the video. Mid caps and small caps get impacted the most. So I'm hoping that there will be some kind of a massive correction that will happen on mid cap and small caps, and then I will get an opportunity to buy. Okay, so then I will invest like heavy money into it. But this is where it is, right? Then comes the final question that okay, sorry industry, like you're just generally negative on these. Guys, I'm just helping you understand valuation. If you see it, great. If you would have listened to me like 6 months ago, 1 year ago, that when I started moving a lot of money to the US markets, you would have been sitting on very good profits like this, okay? But many people just make it a nationalistic issue. Ki nahi, hi, aise kaise US stock khareed le. US is like, so anti-India. Then stop using WhatsApp also. Stop using YouTube also, Gmail also. Stop using everything, every American product. This is not a nationalistic race. You just can't bring like nationalism into like the stock market. Be a little bit rational. You are putting your hard-earned money into the stock market. So you have to look at things rationally, okay? Don't make it like an ego issue. Wherever you see good business opportunity, good opportunities to buy good companies, go and buy it. For example, today at the time of making the video, AMD was down like pre-market 6-7%. So that could possibly become like a good bet in the long term. So if you're putting money for 3-4 years, 5 years, then yeah, I mean, these type of companies kind of make sense, right? So long story short, right now the opportunity is still in the US market, I would say. I'm not saying that you need to dump money. This is not a bulk buy opportunity anywhere. But there are some things, for example, Indian IT is trading at a decent valuation. Mid caps, small caps are very bad from a valuation point of view still, right? They are rich. Okay. US stocks, some of the individual stocks are doing really well. If you're picking AI bets from a long-term perspective, definitely you can consider on a 3-5 year basis, slow aggregation, SIP mode, it works there. Okay. So these are some of the key points. I hope it gave you an idea. Don't just simply buy pharma because there is like, a short-term correction. Think about like second order effect, what US is going to do. Will India's leadership in export of pharma products to the US, will it retain, will it not retain? Think about second order effects there. Manufacturing is mostly capacity oriented. So be a little bit careful if you're buying auto right now, right? Just be a little bit sensible. There's a lot of issues going on when it comes to ethanol blending and whatnot. We don't know what kind of, again, regulatory change will come on this. So we are in a very flux kind of a situation. I'm just being honest, transparent, upfront with you. So this is where we are. So yeah, so that's what I would say. I hope it gave you a little bit more clarity. This is not a great market to invest right now. You have to work really hard to put in your money. So wait and watch. So better days will come in investing. So have patience, exhibit patience. That's the most important thing. And thank you so much for watching. I hope your money really grows, and do subscribe to this channel. I'll see you soon.